Good evening, gentlemen. Hi, Dennis. Hi, Chris. Well, I guess we can get started here. Well, good morning, good evening, good afternoon to those of you joining us, and thank you for joining our webinar this morning. Just as an introduction, my name is Michael Haru. I'm the Chief USA Representative for Tractus, based in Southern California, United States. And just as a brief overview, for those of you who may not be familiar with Tractus, we are an advisory and consulting firm. We work with economic development organizations, investment and promotion agencies, as well as both public and private companies in the field of giving them advice on primarily where to locate and also how to effectively grow and operate their businesses throughout Asia. We're about 60 strong, and we are headquartered in Bangkok, Thailand. We have offices in China, India, and a heavy concentration in Southeast Asia, where we are in Singapore, Myanmar, Indonesia, and of course, Vietnam. I'm joined here today with our two panel experts, which is Dennis Meseroll and Chris Lam. Dennis is our executive director and co-founder of Tractus, and Chris is our country manager in Vietnam. So today we are going to be covering a few topics. As the agenda here states, we're primarily going to be focusing initially on COVID-19 and the U.S. China Trade War and its impacts on trade, supply chain, and investment. Dennis will be covering that, and then we're going to do a deeper dive into Vietnam, and Chris will be covering that, and we're going to hope to answer the question which was posed on the introduction of the webinar, which is, is Vietnam the winner? Is Vietnam the winner for multiple transitions and realignment of supply chains that has occurred with both of these considerations at hand? With that, just a couple of housekeeping notes. As the moderator, I'm going to be fielding your questions, so please send them in on the chat box, and I will answer those when we get to the Q&A section at the end of the presentation. Please mute your mics and turn off your webcams if you don't mind. And with that, we'll get started. So Dennis, well, you can take it from there.
Okay, thanks, Pierre. Well, about 25 years ago, when we started Tractus, and you talked about China, really what we used to like to joke was all you heard was the great sucking sound. The only place in all of Asia that anybody was interested, particularly manufacturing, was China, almost to the exclusion of other countries, and that's slowly changed over time as labor costs and other costs have risen in China, and companies started to take a more holistic approach about looking at their manufacturing footprints all around Asia. Starting about 10 years ago, companies started to think regionally, moving some manufacturing capacity into ASEAN or India, dedicated to those markets, or using those markets those locations as Asian or regional manufacturing bases as a way of managing costs and diversifying supply chain risks. So these issues of managing costs and diversifying a supply chain have been on people's minds for quite some time. Then along came the U.S. China Trade War, and right on its heels, the pandemic, and it accelerated all of these decisions about where and how to structure one's manufacturing supply chain footprint. So the question on everybody's mind now is, who's going to suffer and who's going to benefit from all of these shocks to the global economy, the global trade, and the global investment environment? So today we want to share some of our experiences on these aspects and talk to you about a little bit about ASEAN as a manufacturing investment location. But first, a little bit on what's going on with COVID here in Asia. Most countries in East Asia and ASEAN have weathered the pandemic rather well, whether from a health outcome perspective or from an economic perspective. Vietnam has some of the best statistics in the world. They've only got about 1,000, confirmed cases and 25 total deaths since the beginning of the year. And because of that, it spared their economy. So the forecast is that Vietnam's going to grow, not shrink, but grow about 2.7% this year. And that's by far the fastest in Asia prediction and one of the fastest in the world. China, Indonesia are also predicted to have low, positive, but low growth as a result of their ability to flatten the curve. So you can see very clearly from this graph that there's a really good correlation between controlling the pandemic, having a good handle on health outcomes, and having a positive impact on the economy. Now, a couple outliers are Malaysia and Thailand. They've controlled the pandemic really well, particularly Thailand. They're one of only 4 countries in the world, right, as of today, it changes all the time, but that have been COVID-free for over 1 quarter, so over 90 days. But Thailand's economy has taken a big hit because of the pandemic. It's very dependent upon trade, and not only manufactured goods, but services. So tourism has taken a big hit, and medical tourism, which is also an export. So being so trade dependent, it's really had a big impact on the economy. Same as Malaysia, they're highly dependent on manufactured imports as well as petroleum goods, which have suffered this year as prices have dropped. So as we saw from that other graph, a key factor driving economic growth has been making sure that your health outcomes are good, flattening the curve, and controlling the pandemic. And that countries across ASEAN, with the exception of the ones you see there at the bottom, the Philippines hasn't been doing terribly well at that, and Indonesia, but that's allowed them to spare their economies. And to do that, they've had to be pretty serious about control. Lockdowns went on for quite some time, much longer than we've seen in the West. There's still either total bans on international air travel or very tightly controlled air travel requirements that require anybody entering a country to be under quarantine for 14 days. And that's not at home. They're not letting you off on your own. You really need to be in either a government-owned facility or in a place like Thailand. They have networks of hotels that you have to stay for 14 days and be monitored daily, and you're not allowed to leave. So they're being very serious about that. On the economic side, there's economic stimulus packages like a lot of other countries in the world are providing. Up to $100 billion are being pumped into these economies. And to make it attractive for foreign direct investors, they're changing policies on corporate income tax. In some cases, like Malaysia, they've got a 15-year holiday on corporate income tax for new investors. Indonesia is lowering its corporate income tax rate to 22%, and other countries have other policies that they're putting in place specifically to attract investment during this COVID pandemic period. Now, this concept of China+1, as I alluded to before, is really not new. Manufacturing costs have been rising in China over the last decade. The U.S. trade war tariffs at 25% made a lot of export manufacturing uneconomic overnight, either uneconomic in and of itself or uneconomic compared to other countries that could export out of other locations in the world and not be subject to those tariffs. The pandemic, on the other hand, is the double whammy, because that highlighted the impact of having too much manufacturing capacity in particular commodities or products located in China, which we all know is the factory to the world. They have a market share of 1, 2, or 3 in almost a wide variety of industrial and consumer commodities. And so to offset these impacts of the trade war and the pandemic, companies are looking now seriously and quickly at how they can restructure their supply chain. Now, that doesn't mean we're not seeing companies totally close down in China and leave. It's still the second largest economy in the world. Companies are still going to be interested in investing there. We're working with several companies right now on manufacturing site location projects where the focus is China, because their end product, their major customer base in Asia, at least right for now, is in China. So it's not going to be the end of industrial investment in China at all, but there's an added emphasis on supply chain risk mitigation. And we're seeing that all across different industries. HP and Dell, I've talked about moving 30% of their notebook production out of China. We have automotive component manufacturing companies that we work with that have manufacturing in China. They're not leaving, but they're U.S. bound, North American bound products are being moved to Thailand, they're being moved to Vietnam or Mexico. And so we're seeing this happen right now, kind of in real time. And even while we're in the midst of the pandemic, it seems like the trade war has disappeared. So last year, all the talk in the economic press was about the U.S. China Trade War. This year, it's all about the pandemic. But the battles in the U.S. trade war continue. I mean, even just a few months ago, the U.S. levied another round of tariffs on Chinese exports of 7.5%, import duty increase on $120 billion worth of electronics, machinery, chemicals, and industrial goods. And at the same time, there's been some strategic initiatives to ban the sale of high-tech chips from manufactured by U.S. companies to Huawei, and then this current issue of the forced sale of some of the assets of TikTok in the U.S. So the U.S. trade war is not going away anytime soon. The pandemic, unfortunately, is not going away, at least in the very short term. And so companies have to deal with where should they go? And ASEAN is benefiting from that, both the trade war tensions as well as the pandemic. Panasonic's announced that they're going to be relocating a lot of home electronics production facilities to Indonesia. On the high-tech side, Micron Technology and Jabil Circuit have built factories in Penang, which is the semiconductor kind of capital of the Silicon Valley, as it were, of ASEAN. A kind of COVID and U.S. China trade war related investment was a company called Macrite out of Taiwan. They make respirators or face masks, and they have their biggest production in China. And last year they announced an investment here in Thailand, and they're in the midst of constructing an enormous personal protective equipment plant as a result of the U.S. China trade war issues. So it's going to make it easier for them to export to the United States, which is one of their biggest markets. And then a big winner in all of this in ASEAN has been Vietnam. Sharp, Foxconn, Gertech, dozens of companies are announcing either expansion investments in Vietnam or restructuring their supply chains to Vietnam because of how attractive it is as a manufacturing location. And with that, I'm going to turn it over to my colleague, Chris Lam, who's going to talk more in detail about Vietnam and its attractiveness. But we want to remind you, if you have any questions, please put those in your chat box, and Michael will be able to go through those, and we can answer those after the webinar. So, Chris.
All right. Thanks, Dennis, for handing over and the introduction. So as we just learned, in terms of trade investment, ASEAN has been benefiting from the trade war. There have been different impacts from COVID-19, but next year, the ASEAN countries are about to expect to rebound strong. And on the following section, I'm talking about why ASEAN is emerging and has become an attractive manufacturing hub. And actually, is ASEAN and or Vietnam the right place to diversify the supply chain? So coming to this slide, I would like to present some key figures between ASEAN and comparing it with China. So if you can see on the left table, the population from ASEAN is actually quite big and consists 667 million people. So this is actually double the size of the United States. So ASEAN, which consists 10 countries, have a big population. And then what I also find very outstanding is actually the foreign direct investments. When we look into the numbers from last year, so-called FDI, with 185 billion of USD, so ASEAN surpassed China last year and had high growth rates in terms of FDI. So why is ASEAN actually attractive for those investments? There are three key pillars to highlight from the ASEAN countries. So one of the key pillars is actually the trading opportunities and supply chain. So ASEAN has many free trade agreements with relevant economies such as India, China, Japan, and Korea. But also ASEAN itself has a trade union which is called the ASEAN Economic Community since several years. So it has many free trade opportunities, which is also good for the supply chain. So in case you need materials from different countries, you can get it in with free of duty. The second key pillar is a booming business environment. So the ASEAN countries are increasing in its ease of doing business. And very worth to mention is actually Singapore, according to the World Bank, is ranked second in ease of doing business, and Malaysia actually ranks 12th. And yeah, with Malaysia on ranking 12, that's better than many European countries, including also Germany, where I'm actually from. And then the third relevant key pillar is the young, large workforce. So as mentioned earlier, ASEAN has a huge population. There are lots of talent here in Singapore, Malaysia, or many other countries such as Vietnam or Thailand in the cities. But then there's also a big manufacturing population. So these are beneficial key pillars. Going to the next slide, ASEAN has experienced remarkable growth. So looking into the last decade, so the GDP nearly tripled, and you have positive growth rates in trade and especially in FDI inflows. Coming to the question, who are actually the main investors by origin into ASEAN? So when I ask some friends, then they're thinking actually about Japan or Korea, but it is actually the United States, 2019, in front of Japan and the European Union. So the United States actually invested in ASEAN more in total than $330 billion US, which is triple than in China. Yeah, and then among those countries, there are few countries which are often considered for manufacturing locations. Those countries are Vietnam, Philippines, Indonesia, Thailand, and Malaysia. Those countries are emerging economies and have a big working population. And then there are also two other countries, sometimes also considered by some investors, which are Cambodia and Myanmar, especially due to the manufacturing wage. But those countries have, are still developing and has a less beneficial ease of doing business compared to the other countries mentioned before. And then, of course, you have three other countries with Laos, Brunei, and Singapore. So on this chart, you can actually also see the manufacturing wage. And it's interesting to see that Philippines or Indonesia, that the average wage is a bit lower than Vietnam. But it doesn't mean that you can produce in those countries much more cheaper, for example, than Vietnam. So it really depends. So it's the average wage, and in some regions or islands or rural areas in the Philippines or Indonesia, the wage might be lower, but if you produce then in Jakarta, then the wages are higher than in Vietnam, for example. So it also really depends, not only considering the countries within ASEAN, even go also a step further. It's very important to know the country themselves, because they have also different regions, which has each its pros and cons. So coming into this slide, so I'm talking about the investment climate and free trade agreements. So on the left side, you can see a selection of ASEAN countries, and you see the ease of doing business index and also the short-term political risk index. The higher the value it is here, actually, the better it is. So for Vietnam, which has a score around 85, is political very stable. And then in terms of ease of doing business, we can see that Vietnam, Malaysia, and Thailand have been increased and are offering a very good investment climate here. Especially Malaysia and Thailand increased in starting doing a business, and are also very beneficial in terms of trading cross borders. While in Vietnam, it's the same. Vietnam, nowadays, it's also easier to start a business here. So on the right side, which is very important for supply chain considerations, you can see an overview of selected ASEAN countries with relevant free trade agreements. So as we can see here, Vietnam, Malaysia, Thailand have a few or lots of free trade agreements, and especially Vietnam and Malaysia are two countries to highlight, which are part of the Trans-Pacific Partnership. And then Also worth to mention is actually Vietnam, which has a European Vietnamese free trade agreement, which is active just starting this month in August, from the 1st of August. So considering this, I mean, these countries don't have a free trade agreement with the US yet, but in terms of supply chain, when you produce in those countries and you need materials and so on, then you can benefit from free trade as well. Or if you have a manufacturing plant in those countries here, for example, also in Vietnam, then producing here and exporting to the European Union could be also a very beneficial factor for your investment. But looking at these two things, the investment climate and the free trade agreement, these are some aspects to see what are pros and cons. So it really depends on the industry you are at. So Malaysia is actually a popular choice for high-tech or aerospace, while the Philippines is a popular choice for chip building. Thailand is popular for automotive, and Vietnam for garment, and recently also electronics. So there is not really a clear winner in terms of which country fits better for the supply chain. It really depends, considering here the industries. So as follow, I would like to talk about then why Vietnam is attractive for many China+1 strategies, and also for which sectors. But before going into detail, I want to remind you, if you have any questions also to the previous section, feel free to use the chat box, and at the end, Mike, the moderator, will collect it and then ask those questions in our Q&A session.
Yeah, thanks, Chris. Thanks for the reminder. I do have some questions coming in, but please feel free to send them in, and we will address each one of them when we get to the Q&A session.
All right. Thanks, Mike. So talking about Vietnam now. So why is Vietnam attractive for supply chain considerations? So one important factor is actually its economic stability and remarkable growth. So when we also think back 12 years ago, during the financial crisis, Vietnam economy was still stable and growing. And also if we consider Vietnam now with COVID-19, while many other economies are struggling or shrinking, Vietnam is still forecast to increase this year and also to rebound strong in the next years. And there has been a research study by 2060, if Vietnam keep growing with 6%, it will be among the top 20 global economies, which is a really amazing fact. The second point is increasing global integration. So before, I already showcased that Vietnam has many free trade agreements, and especially with the Trans-Pacific Partnership and the European Vietnamese Free Trade Agreement, Vietnam will have access to 40 countries and enjoy free trade with those. The third point are for sure then the beneficial manufacturing costs and the labor pool. So Vietnam has a large population with 97 million people, and also a high ratio of manufacturing employees, but also then talented people in the major cities. And then in terms of labor costs, Vietnam average wage is $255 for manufacturing, which is much, much lower than China, for example, with 866. And the fourth important point is the strategic location. So Vietnam is a neighboring country to China, and so many investors are moving actually also in the north in terms of supply chain if they need materials from China. So this is a plus point for Vietnam. But then in addition, Vietnam is in the heart of Southeast Asia, in the center, and also has a very long coastline. So it offers major shipping routes. And on the next two slides, I would like to talk about how Vietnam actually performs in terms of trade. And here we can see two graphs, one in regards to Vietnam exports to the US, and then also one in regards to China exports to the US. And we can clearly see that Vietnam has been increasing and China has been decreasing. So this trend, what Dennis mentioned earlier already, has been accelerated with the trade war. And then on this slide, you can see that if we talk about just US imports and trade only, that Vietnam has been the winner of the trade dispute. So here we can see figures about US imports, how it changed from 2018 to 2019, and Vietnam growth grew as fastest. Yeah, and then besides trade, also foreign direct investment has been increasing and flowing into several regions in Vietnam. And among the top investors in Vietnam in terms of origin, Korea, Hong Kong, and Singapore are leading here. US is actually only ranked 12, but many investments from the American companies are going into Singapore and Hong Kong actually. And then from Hong Kong, Singapore, those investments are going into other Southeast Asian countries such as Vietnam. And where are those investments going? So many companies are considering in Vietnam Hanoi or Ho Chi Minh City, the north and the south, but actually Vietnam consists of 5 major regions. So there's also central Vietnam, there's also the Red River Delta in the northeast of Vietnam with the Haiphong area, very close to China, which has a new highway road link to China actually, where there's can be easily goods traded between Vietnam and actually up to Shenzhen. And then in the south, you have the greater Ho Chi Minh City area, but also the Mekong Delta to consider for investments. And within the foreign direct investments, the top 3 investment sectors has been manufacturing, real estate, and retail. And within manufacturing, actually manufacturing itself made up to 65% last year in FDI investments. And as you can see here on the charts on the right, in terms of value and number of projects, there has been a high increase from 2018 to 2019. And relevant subsectors are actually textile, garments, electronics, and industry goods. About these sectors, I will talk about a bit more detail in the following slides. So textile garment is the second key manufacturing sector in Vietnam and ranks second in exports globally behind China. So China here is still the main export country in terms of garment, but Vietnam ranks already second and surpassed India and Bangladesh. And there are some popular textile garment investments in Vietnam, such as Triumph, Decathlon, or Scavi, who's producing for Victoria's Secret, for example, or also Hanes brands.
Yeah, it's interesting you mentioned. A good example is Hanes. It's a company we've been working with for probably 18 years now. And we started working with them almost 18 years ago on their supply chain restructuring project, where they were looking at where were the next lowest cost locations for them to establish, cut and sew and textile operations in Asia. And we've been working with them ever since, optimizing that supply chain, which is something companies do all the time. So again, kind of the overlying theme is the issues of supply chain restructuring. Where do you locate? Where are the optimal places for your investment? It's not something that just started with the U.S. China Trade War and was accelerated with COVID. It's been going on for quite some time.
Yeah, thanks, Dennis, for the comment. Yeah, there are many brands active in Vietnam, not mentioning here, but there are also brands like Nike or Adidas. They're working with subcontractors, and I had a chance to meet the CEO from Adidas a couple of months ago, and I learned that Adidas nowadays also produce 50% of the footwear globally in Vietnam. And some other investors, they say, hey, Vietnam, question mark, about then the supply chain with a garment. But actually, Adidas mentioned and managed also to source the materials locally. So Vietnam is very developing in this sector. And here's a map where you can see where the investments in garment are flowing. It's mainly in the south, but also in the north and central Vietnam. And nowadays, it actually goes more central, north, or also to other areas of Vietnam. Then talking about electronics. So actually electronics is one of the fastest growing sectors in Vietnam. and nowadays the most biggest export sector. So there have been many big investors such as Foxconn or Samsung, or also Intel, investing in Vietnam. And it's very interesting to see that I just read that Foxconn is doubling their export value this year in Vietnam. It's up to 6 billion despite the COVID-19 situation. So that's an interesting fact. And then also very interesting, Samsung is producing more than 50% of the smartphones in Vietnam. And with the COVID-19 pandemic, there have been issues in Korea with producing smartphones for Samsung. So what they did is they shift actually even more production capacity to Vietnam then, while in Vietnam was handling the COVID-19 situation very well, and businesses and factories were still running. Yeah, and on the right, now here you can see where the major investments are going into Vietnam. It's often in the north because of the proximity to China. And then another sector to highlight is the industrial goods sector. And here we can also see a very interesting development from this year compared to last year in terms of U.S. machinery imports. As you can see on the left table, then Vietnam also surpassed China in machinery here. But beside this, there have been investments and footprints also longer in Vietnam, and also some factories which are still expanding. So Schaeffler just opened a new plant in Vietnam. Bosch is expanding, Siemens expanding, and also TTI is investing here. So TTI is actually a very good example. I also met one of the global supply chain manager a few years ago here. First time coming here and considering investing here. And he was very amazed about the development of Vietnam. And then, yeah, just beginning of this year, TTI announced that they are about to invest a $650 million plant and R&D center in the Saigon High-Tech Park. So this plant will be actually the second biggest plant globally for TTI. So also in terms of industrial goods, more investors coming into Vietnam. And in terms of allocation in Vietnam, it's a bit mixed between the northern, southern, and central region. On this slide, then, I would like to talk about the opportunities and challenges, and then you will also understand why the investors come to Vietnam for the manufacturing expansions. So as for opportunities, of course, Vietnam has a very good strategic location. Then there's a beneficial workforce and labor wages, which I mentioned earlier. And then there are, in addition, also attractive tax incentives. There are specific incentives for investments for high-tech, for example, or if you have labor-intensive plants and factories up to 3,000 or over 3,000 employees, companies will enjoy specific tax holidays incentives as well. So this was also a reason for Samsung coming to Vietnam. And then it's the participation of several free trade agreements. And here, when I talked with the manager from TTI, then he also mentioned it's very interesting because of the European free trade agreement, because then TTI is producing here, not only exporting to the US, they will also develop the local supply chain and plan to export to Europe. And then furthermore, it's effective COVID-19 control, what I mentioned earlier. So Vietnam was able to handle the situation very well. So it has a less impact and businesses are running normally here. But then, of course, there are also challenges like raising labor costs and labor competition in some areas. Supporting industries are still developing. And then in some areas, there are restrictions for specific manufacturing businesses which are non-environmental friendly. So here it's important to do some due diligence. So in some area you have the labor competition, in some area you don't have it, or in some areas the supply chain is developed or maybe not so developed. All right, so this is about the opportunities and challenges. I would like to hand over back to Dennis again, who will talk about recommendations.
Yeah, thanks, Chris. I know we had a question at the beginning about whether Vietnam was going to be the winner in manufacturing supply chain restructuring challenge. But when we do location strategy assignments or site selection assignments, we're always looking for a short list of locations. Those could be countries, or those could be regions, or those could be sites within a particular country, and that's usually 3 of them. And Vietnam, in terms of the China+1 selection, Vietnam is absolutely going to be on the short list for a lot of manufacturing investments, as well as countries like India and places like Mexico. And whether or not Vietnam is the optimal location for a manufacturing investment, or makes the most sense for your business, is really subject to an objective, comparative, and disciplined analysis of operating conditions, operating costs, and the risks that need to be balanced in a particular company's operation. So what location meets the best operational, strategic, and financial objectives of the firm requires a detailed analysis. But we can absolutely be certain that when it comes to manufacturing, Vietnam is going to be on that short list. It's going to be one of the countries that needs to be evaluated as a place to locate if you're looking outside of China. ASEAN, if we take a step back in the region, ASEAN is always a unique, we think it's a really unique place, because we think there's no place in the world in such a small geographic area where you have such a diverse range of countries with such a diverse range of factors and attractiveness from an investment perspective. Every place from a place like Singapore, which is highly attractive to knowledge, high-tech knowledge workers, one of the easiest countries in the world to do business, the most transparent countries of the world to do business, and one of the wealthiest from a GDP per capita perspective, all the way to places like Myanmar, which has one of the lowest manufacturing costs in the world, but it's not necessarily an easy place to do business. And then there's countries with these different operating conditions and costs, everything in between. So you can usually find a place somewhere in ASEAN that will meet your needs, where it should be on the short list. The actual choice is going to be up to that methodical analysis. So with that, I hope we've answered that question a little bit, and we look forward to sharing some time now to answer your questions. So, Michael, I think you've got the list of them. I've got one. I've got one that came in on mine. So,
well, let's start with the ones that I have here.
Okay.
The first one, thank you for sending in the questions. I guess back to Chris, the question is, how long will Vietnam be considered a low-cost location due to the rising demand, rising labor, and rising land costs?
Yeah, that's a good question. I mean, in terms of the land cost, there are some areas which are getting more expensive, but then Vietnam is a big country, and there are also some areas in central Vietnam or the Mekong Delta area, or a bit more far away from Hanoi, where the land costs are still reasonable and it should be still, in terms of increasing costs, should be manageable. In terms of labor costs, then I think it really depends also what kind of labor you're looking at too. So, and what kind of experts you're looking to. Of course, the costs are also then increasing in Vietnam. But then this is something which is happening in all emerging markets. So I think it will increase, but I guess the beneficial cost factor will be here at least for 1 or 2 or 3 decades. But then it's not only about investing to Vietnam and considering it as a low-cost country. So Vietnam should be seen as a whole, and then also offering free trade agreements as mentioned, and then benefits with its strategic location. So an investment should be not only considering the cost, I would then recommend it also have lots of non-cost factors to consider, which can end up later then as cost factor as well.
Yeah, and Michael, just to add a little bit to that, so as investments poured in, there's been more demand for labor. labor rates in Vietnamese dong have gone up consistently every year, sort of 10%. But at the same time, the government's been able to manage their foreign exchange rate, and so the Vietnam dong to U.S. dollar exchange rate has been dropping at almost the same rate. So you've had sort of the net real cost increases have been manageable over time. And just another issue, I think that is a good question. Something that came up, when Vietnam first became a really attractive place to invest, there was talk about, is Vietnam the next China? And we're not sure where that came from. It's nowhere near the size. It's never going to be the next China because of scale. Only India can be the next China, as it were, because it has the scale, both in terms of manufacturing capacity and labor. But so there is going to be a point in time when, for particular industries, it's not necessarily going to be competitive. But that's why when you're looking and you're doing your analysis, does it make sense? You can't just look now. Where does it make sense for you to be currently? But you need to see where the puck is going. What's going to happen? What's the trajectory going to be like for wage rates in the specific sites that you're looking at in the country?
Thanks, Dennis and Chris. The next question is probably for both of you, but it goes, the U.S. is the top FDI investor in ASEAN, but yet it doesn't make the top 5 investors in Vietnam. Can you address the discrepancy and what trends you see regarding U.S. investment in Vietnam?
You want me to take that one, Chris? Because we talked about that just the other day. We thought,
Yeah.
I wonder why this number is like this. But
I have a comment as well.
Yeah, and I think it's linked to it's linked to Vietnam, because if you look at Vietnam, you wonder, wait a minute, if you look across ASEAN, but you look at Vietnam, the biggest investor is Korea, and Japan kind of trails. If you look at all the other countries, Japan is number 1. So I think what we're seeing, we looked at that and we thought, what happened was the U.S. investment was coming in and was going into other countries before Vietnam was really a hot location or a viable location for investment. So you have that investment, you have that manufacturing capacity in place already, and it doesn't move overnight. And so you're not going to see that shift for a little while. A lot of U.S. investment in ASEAN is in oil and gas, Thailand, Malaysia, Indonesia, so much less in Vietnam. So that's where you see that concentration there. And so Korea is the opposite. So they were later to the game of foreign direct investment. The Japanese were already in certain countries. The Koreans started to invest in ASEAN about the time Vietnam really started to become an interesting place to invest. And that's one of their biggest, they dominate there because they got in there while the Japanese and other nationalities were already in other markets. They were looking for the next best place to be.
Yeah, and then another fact is then what I mentioned is that many investments from the US are going into Singapore, Hong Kong, and then those investments are going forward to the other ASEAN countries, such as Vietnam. But I think in the future then the US investments, the direct investments will also increase. So what hasn't been tracked in the statistic I'm showing was, for example, the huge investment now coming from TTI which is 650 million US dollar. So I think the trend, there will be more direct investments coming then in the near future into Vietnam.
Great, thanks guys. Next question. At one time, Vietnam scored quite poorly on corruption indexes. Where are they today, and what advice would you give on managing that aspect?
Yeah, I think, well, there's several countries in Southeast Asia that score poorly, and there's a lot of countries around the world that score poorly on the corruption index, particularly the developing ones, where we don't see that as much on the manufacturing side, no matter what country you're in. And what you do come across occasionally, you can manage it. You need to manage it in terms of particularly your schedule. In some cases, it depends on what country you're in. Certain countries, for example, American investors have a reputation. They do not participate in corruption. So people know that already, and so they don't ask. And they ask other investors from other countries that are less concerned about that. In a place like Vietnam, you may be investing in an area where they're a little less familiar with that cultural aspect of our the way we do business, and so you have to build a little bit more time in the schedule in your investment schedule to make it very clear to the people you're dealing with that that's just not a possibility. And so far, that hasn't been a major issue. Where we see that, where it is a major issue, where infrastructure projects, real national scale type road, rail, dam, kind of projects that are, where you're dealing with the government. On the manufacturing side, much less of an issue than we've seen.
Yeah, so I also then see development here in Vietnam where it's also then getting better, and as Dennis mentioned, it is less an issue in manufacturing. And many processes like tax or documentation for import-export, they get digitalized, and so there's also then less room for bribes and corruption. But as an investor, if you follow the rules and do everything well prepared, then there are no issues.
Great, thanks, guys. I think this is a good question. It says, we run into raw material challenges within Vietnam, and material needed to be sourced from China and other ASEAN nations, driving additional costs. If you could speak to it, we'll be greatly appreciated. I'm going to repeat it, or you got it?
No, that's pretty clear. I mean, I think that's going to be highly company dependent, of course. Being able to sourcing in, and we've worked on projects where we've looked across, doing this cross-border trade, sourcing within ASEAN and China. Vietnam has an advantage because of the free trade agreements it's got with China, as well as all across ASEAN, so that helps. What we've seen over the years is, over the last 10 years, as Vietnam's developed as a manufacturing location, one of its weaknesses is a weaker or a less deep manufacturing supporting infrastructure. And so you probably, are going to need to be sourcing more components and raw materials potentially from overseas. We haven't heard that it's that much of a cost issue, so it may be the particular issue related to the commodities you're dealing with. But normally the free trade agreements help quite a bit, and the proximity to China, if that happens to be a place where you would source your raw materials. We haven't heard that, but again, like I said in my concluding remarks, it's highly dependent. So whether or not Vietnam makes the most sense for a particular investment, it's highly dependent on the business case. You have to look at what raw materials are you using, can you get them locally? If you can't get them locally and you're importing them, what are those impacts? What are the supply chain impacts on your costs? Because Thailand, Malaysia, while labor costs may be more expensive, those raw material costs, or the availability of them locally and the cost of them may make more sense. So just because Vietnam has, say, low wage rates doesn't mean it's necessarily as a whole, holistically, the best place for your investment.
Anything to add on that, Chris? I think you answered really well.
No, nothing to add here.
Okay. Next question is, I guess, related to the astounding growth. Says, how is Vietnam's infrastructure coping with this growth? Utilities, highways, et cetera, development. Probably for you, Chris.
Yeah.
Yeah, so Vietnam invested actually a lot in infrastructure. It also depends on which area. So in the north, there have been many infrastructure investments. There are very modern highways now. The links from Hanoi to Haiphong or the port are very well. But then on the other side, for example, around Ho Chi Minh City, where many investors are already, there are some highways which are a bit packed, or some links to the ports a bit more busy. So also here again, it really depends on which area you invest, or in which province you are, or which industry park you even select. It can be also even an industry park or two industry parks in the same province, but maybe one province has a better highway link to the port, and the other maybe less. So it's there are some infrastructure challenges, but then there are other areas where I've been recently too, and I was really surprised how developed then some highways are now. So it really depends on the region and area.
Yeah, and it goes back to that. It goes back, Michael. It goes back to looking where the puck is going. So what's going to be happening in the future? You know, maybe everything looks great about Vietnam or a location that you're looking at, but right in front of you in the next year, you see lots of congestion on the roads getting to the port or from the airport. You need to look at a place like Vietnam. Everything's been, since 20 years, everything's gotten better every year. The Vietnamese government's done a really great job of investing in infrastructure. That takes time to implement and put into place. So you need to see not just what's going to happen maybe after you start up, maybe there will be some challenges with the infrastructure, but when a place like Vietnam, you can bet that a year later, 2 years later, you can look at plans, right? Vietnam is a planned economy, so they have quite good plans for just about all the major infrastructure, and you can see what's going to happen in a particular area, and that's one of the things when we evaluate set locations, you have to look at the future, and where is the infrastructure going in, and then also how is a particular country's government been at meeting their plans? Are they actually building out the infrastructure as they expected?
Great, thank you guys. The next question says, much of ASEAN is Muslim. Is there any difference within Vietnam in terms of business climate or other cultural considerations?
Yeah, so the people here in Vietnam, I mean, they're mainly how to say, Buddhism, or it's a bit some are have other beliefs. But I think I'm not sure if this is having an effect in investment climate, if they're Muslim or not. But generally speaking, then the Vietnamese people are very open-minded, and they're very welcoming. International investments, and looking forward to global integration.
Okay. Another interesting question. Has the inability to own land in Vietnam been a detriment to FDI versus other ASEAN countries? And do you see this as ever changing?
Well, in a place like Vietnam or China, so centrally planned economies, right? The land is owned by the state, or collectively, it's owned by everybody, and you're allowed to have land usage rights. So another way that in the real estate realm, that's called a ground lease, and those are long term. So 50 years, and in some cases you can extend it to up to 70 years, and so you own the rights to use the land as a ground lease for those 70 years, which is almost double or triple the investment horizon that the companies look at. And so we don't see anybody seeing that as an impediment. In a place like Thailand, individuals, natural persons can have freehold title to property. So, and a foreign investor can have freehold title to property. But that a right to have the freehold title is limited by as long as you're operating your own investment. So if you ever decide to close the investment down, then you have to sell that property back to a Thai individual. You're not, foreigners aren't allowed to hold and speculate on land. In Malaysia, that's maybe the freest. Companies can hold freehold title to property in perpetuity, and individuals for that matter. So we don't think that's a major impediment. Companies are used to that system of ground leasing.
Perfect. Thanks, Dennis. Chris, did you want to add anything to that, or do you think it was sufficiently covered?
Yeah, no further comments from my side.
Okay. Here's one that's got some breadth to it. How does Vietnam manufacturing capability, quality, and capacity compare to Malaysia, Thailand, Cambodia, Laos, the Philippines, and India?
Does that person want a proposal from us?
Yeah. That's $1 million.
That is a broad question.
Yeah, very comprehensive question, Dennis. I leave it to you.
Right, and you know the answer that I'm going to give. It depends. comparing all of those different locations, those countries, right, really depends on what we're looking at. Because I heard Malaysia, so do you want to look at that? We did a project for an extraordinarily advanced hard disk drive component manufacturing company that had almost a black plant, very few operators operating machinery. It was almost all totally automated, and their tool and die requirements, really the best place for them, the only way they could get the talent was in Malaysia. And even if they ended up deciding to invest in Thailand because that was where the supply chain was, right? The hard disk drive manufacturers were here, but they ended up recruiting talent out of Malaysia because it was that particular type of talent was what they needed. Kind of from what we've heard with our garment and textile companies that do business in Vietnam and have sew plants there, their productivity of their garment operators is kind of second to none globally. And they have plants in Thailand, and they've had plants in China as well. And Vietnam is by far the most productive for them. So there's just kind of some examples of different operating conditions. If you're in a place like Laos, probably a little bit less productive. It's a little just culturally. You're not going to nearly get the productivity in a place like Laos that you get in Vietnam for sure. So there's maybe some vignettes there. Not the
first question that it was the first question that incorporated a question about India. So
okay.
Yeah. I think we're getting close to covering all of them, and we're getting close to the end of our time.
Yes.
One note to everybody who is still with us, which I didn't mention, we are recording this, and we will be distributing the recording to those of you who attended today. So if there's things that you didn't catch, don't worry about it. We'll send it to you. I think we covered everything, guys.
Okay.
Oh, actually, I got one last question. I apologize. It's a little ambiguous, but maybe we can talk to it. I think it was a question related to Vietnam's emergence in the context of economic projections. What role does Latin America play in the equation? Maybe it's looking at a comparison between the cost of production in Vietnam versus Latin American production. That's the only thing I got from the question. So.
Well, I think one of the things we've seen, and in my concluding remarks, I mentioned that from a U.S. China Trade War or supply chain restructuring perspective, particularly with the trade war, definitely one of the shortlist locations for American companies is Mexico, just because of proximity, the NAFTA, USMCA, the ability to duty-free imports, proximity, so your inventories can be much lower. You can have just-in-time manufacturing. We're seeing lots of the companies and some of our clients that are in the automotive sector looking at Southeast Asia versus Mexico. You're going to see that in Latin America. We did some work with APEC, the Asia Pacific Economic Cooperation Council, looking at supply chain connectivity between Latin America and Latin American, particularly resource-rich countries like places like Chile and ASEAN. And one project that kind of connects them together, at least Central America, that we did in Vietnam was work that we did for a company from El Salvador, making packaging for the garment industry. And so several of they were supplying the garment cut and sew facilities in Central America, in the Caribbean. And their customers said, "Look, we're going into Southeast Asia. We're going to Vietnam. We need you to come over and supply us there because we like the work that you're being done there." So, don't see much of that at all, but we think we might see that a little bit more in the future. But sort of globally, we're going to see kind of companies making decisions about where do they need to be in Europe. If it's a U.S. company, what kind of European presence do they need to have? European in the Middle East, Africa, North Africa type of presence, where do they need to be in Asia, and then where do they need to be in the Americas, be that North America, Central America, or South America. At the very least, kind of 3 legs to the stool, and then the bigger the company will have even more legs on that table, as it were, with their manufacturing footprint. They'll be, China, maybe a South Asia, India, and then ASEAN presence, instead of just one location in Asia.
Great answer. Well, gentlemen, we've reached our hour limit. So again,
Okay.
wanted to thank all the participants. Thank you for joining our call today. We hope you found it informative and enlightening. Chris, thank you for your insights, and Dennis, thank you for your insights as well. We appreciated that and answering the questions. So again, we'll distribute this as a recording to everybody who attended, and thank you for joining. And if you have any further inquiries, our contact information is on the screen. Feel free to send an email to Dennis, Christoph, or myself at any time, and we'll get back with any specific questions. So thank you for joining today, and thank you, gentlemen, for your time.
Yes, thank you, and stay safe, everybody. Have a good day.
Thanks. Have a nice day.
Wear your mask.
Yes. All right. Thank you.